In today's video, I'm going to be speaking about how to buy retail savings government bonds. These are bonds that enable you to loan money to the South African government and earn some interest on a per annum basis. And obviously, to show you how this works, I'm going to share with you my computer screen. So let's go. Buying retail savings bonds is something that's very easy. All you're going to do is come to www.RSA Retail Savings Bonds.gov.za. So that's the website. The other way, of course, you can visit a post office, but I can't show you that today. So you're just going to have to use the website for now. And it's pretty simple. All you're going to do is click register. So if you've ever registered for pretty much anything online, that's what you're going to do. And they're going to ask you, are you currently a client or you're not a client? And obviously, if you're not, you're going to press no. And that's going to ask you, hey, please send us your identity card stamped and your bank statements to this email address, which is www.applications@treasury.gov.za. And you're going to press OK on that. And then it's going to lead you to this online registration form, which you're going to fill in. Now, if you've ever filled in anything from a bank or anything from a financial institution, then this is something that's going to be pretty easy for you to do. And once you've filled in these forms and obviously emailed your ID copy and your bank statement stamped, then you're going to be good to go and you'll be able to pick the products that you want to buy. And you get pretty much 3 products from the RSA Retail Savings Bonds. The first type of bond you get is a fixed rate. The second type is an inflation-linked one. And then the last type is an RSA top-up. What fixed rate means is that if you invest for, let's say, we choose this one for 2 years, your money will be held for 2 years by the government. So say you lend the government 1,000 rands, they're going to hold that 1,000 rands for 2 years. And during those 2 years per year, they're going to pay you 9.5%, which is pretty cool. And the same is true for all these others as well. Then you get the inflation-linked ones. And you see these rates, people tend to look at these rates and say, whoa, this is so low. But what they're missing is that these rates are inflation plus what you're reading here. And so we have to think, what is the rate of inflation right now in South Africa? So for that, we go to the South African Reserve Bank's website, and we can see CPI at the moment is currently 7.5%. So 7.5% plus 2.75% is the return that this bond would currently give you at this moment, which is not pretty bad. And the same is true for all these others. Then you get the RSA top-up bond, which basically allows you to top up. And this one has a nice rate of 10%. So that's pretty easy. Open up your account, send through your documents, and pick your product and start earning interest. The question, obviously, that logically follows is, how do bonds work? It's very simple. There's you as the investor. You lend money to the issuer. So in this case, it would be the government. You sign a contract where they say they'll bring back your money, right? So that's the period. So in this case, we have these periods here of 2 years, 3 years, 5 years. That's when they give you back your money. Then they tell you, hey, during that period, we'll pay you interest of this much per year. And that's obviously what the interest rates are. So it's very, very easy to understand how a bond works. The nice thing, of course, about bonds is, why would you want to use them? The reasons is earning interest, which is very nice. And of course, your capital is guaranteed, especially with the retail savings bonds. They do have a guaranteed capital guarantee, meaning if you give the government money, they will pay you back whatever money you had given them. So that's the really nice thing about these particular bonds. Not all bonds are like that, but specifically the RSA Retail Savings Bonds are exactly like that. So if you're someone who wants safety and security, then the RSA Retail Bonds are for you. But why would you avoid them? So this is one aspect about the RSA Retail Savings Bonds that I do not necessarily like. And that is, your cash is kind of locked up, sort of. All right. So they've got a stiff regulation in terms of when you can actually withdraw. So you can withdraw, but if you withdraw under 12 months, generally you'll have to forfeit your interest, which is something that's not cool. I would prefer, to be able to withdraw at any time, but they don't allow that. And obviously there's a really good reason why. It's a loan. Imagine somebody borrowed you money, you took that money, you were using it for something, then all of a sudden they called you and said, hey, please give me my money back plus the interest. It wouldn't be possible. And so that's why they sort of have these stiff rules about when you can withdraw and when you cannot withdraw. So these are really suitable for somebody who doesn't mind just investing the money, taking the interest for like the next 2, 3 years or 5 years and not have to worry about getting back their principal. But if you're someone who does want to get back their principal, then there is another way for you to actually buy bonds. So if, let's say, using EasyEquities, what you're going to do is you're going to go on EasyEquities and then you're going to click invest now. And then once you click invest now, you're going to choose ETFs, right? So that's the vehicle you're going to use. Remember, an ETF is just something that holds other assets inside it. And you're going to type the word bonds. All right, so the word bonds, and then it'll give you a list of bonds to choose from. And so these are the ones that are available in the South African accounts. But remember, EasyEquities offers a USD account, Australian account, European account, and also a British account. So this works with all these accounts, but you'll find different bonds inside them. And so these are the ones that you'll have. The South African ones, it's mainly these two: One Invest SA bond, the SA bond ETF by Satrix, and the First Rand inflation bond as well. And then there's bonds from other parts of the world, even one from Namibia as well. But the key thing about this, if you're going to buy bonds this way, is you have to know about the risk, and of course you have to check what's inside the bond. So what you can do is go to Google, type say One Invest SA bond ETF, and then that will give you the minimum disclosure documents, which gives you like a list of things that are in this particular ETF. So if you want to get more information about it, so these are the bonds that are in this particular ETF. The same is true for the Satrix one. You'll get a very nice document and you'll see what's inside it. I can see the distribution. They distribute biannually, meaning they pay dividends twice a year, so biannually, and I can see when the last time they paid. That's always good information to know. And because I can see what's actually inside the bond, that means I can actually track the bonds, through other advanced methods like I'm using here on TradingView. I can see the South African bonds, sort of see how their performance is in terms of price. And this brings me out to the risk of buying bonds through an ETF. Remember, when you buy an ETF, the price of the ETF goes up and it can also go down. Meaning if you invest 100 rands into, say, this particular ETF, its price can actually go down. Maybe it goes down from 100 to 95 rands in value, or to 90 rands in value. And if you obviously were to sell, then that would be you taking a loss from the investment, which is not something that you would like to do. So it's very, very important that when you do this, you check what's inside the ETF, and then you run a bond analysis check to sort of see if these bonds are going to be performing very well in the future. So don't just focus on the interest, but also focus on the performance of the ETF. And one other key thing when you're buying bonds, you want to check credit ratings. All right, whether it's the RSA Retail Savings Bonds, even though they have a guaranteed return, you still want to check, what's the credit rating of the country or the institution that I'm lending money to. So that's something that's very key. And we can see South Africa is rated as speculative, meaning, it's not investment grade. It's not bad, but it's not investment grade. We're just little below investment grade from all the ratings agencies, whether it's Standard & Poor's, so that's S&P, Moody's, or Fitch. But I believe in my country. In fact, S&P back in May gave us a positive outlook. They expect us to sort of fix our finances. And based on the last mini budget by the finance minister, we know that things aren't as bad. But one last thing, if you're someone who is looking to earn dividends or interest, there's plenty other assets in the South African market that will pay you. So right here, I've got a nice list of ETFs that pay some very nice dividends. You can see 19%, 14%, 13%, etc. One of my favorite one is the Satrix Divi Plus portfolio, which pays a nice dividend of 19%. So take that 19% per year and run with it. There's plenty of ways, of course, to earn interest in the markets. RSA bonds are not the only way, though these are the most safest investments that you can actually make in South Africa. Anyway, guys, that's it. That's all I have for today. Enjoy the rest of your Monday, and see you next time.